Hello, welcome back to the channel. Most beginners in trading only ask one question: how much can I make? But the professional traders ask different question: what is my win rate? What is my risk? And what is my expectancy? So in this video, I will break down risk reward, win rate and other key ratios so that you never trade blindly again. Let's get started. So what is risk reward ratio? Risk reward ratio simply means how much you are willing to risk compared to you aim to gain. So here are some examples. If you buy shares of MP at 1500 and you set stop loss as 1450, that is 50 rupees stop loss, and target is 1600, it will be 100 rupees profit. Then here your risk reward would be 1:2. This is one example. Consider another example where you are risking 100 to gain 100. So here your risk reward will be 1:1. And another example, like you are risking 200 to gain 100. So your risk reward would be 2:1. And this is against you. Even if you win more than 50% of the time, you will lose at the end. Let's consider you have 10 trades, you win 5 and lose 5. So when you are losing, you will lose 200, and winning, you win 100. Okay. So here your loss will be 1000 and profit will be 500. So even if you are winning 50% of the time, you are losing here. So rule of thumb is your reward should be greater than your risk. At least risk reward should be 1:1.5 or 1:2. Let's move ahead and see what is win rate. Win rate is your percentage of profitable trades. Suppose you have total 10 trades, 6 are win trade and 4 are lose trade, then here your win rate is 60% and loss rate is 40%. So now you may think you should need to win 80 to 90% of the time, but that is not true. Even with 40% of the win rate with strong risk reward, you can still be profitable. Think of it like a cricket. A batsman don't need to run 100 in each game. Consistency with good average is what matters. Now let's move ahead and see how risk reward and win rate work together. This is where most traders go wrong. They think they need a high win rate, but actually the combination of risk reward and win rate that matters. So consider these two examples. Example 1 where risk reward is 1:2 and win rate is 40%. So again consider number of trades, total number of trades are 10. So win rate 40, that means 4 trades you will win, and since risk reward is 1:2, so 200, this is plus 800, and you will lose here 6 trades into risk reward is 1:2, so 100. Hope you understand this. So when you lose 100, when you win, you will win 200. 6 minus 600. Your net PNL would be plus 200. So if you see, even if with 40% of the win rate with risk reward 1:2, your system will be profitable. Consider example 2 where you have 1:1 risk reward and win rate is 60%. And again total number of trades are 10. Win trades will be 6 into, so here 100 when you lose, win, minus 100 when you lose. Okay, so 6 into 100, 600. Okay, and losing trade will be 4 into 100, that will be minus 400. Your net P&L will be plus 200. With this 60% win rate and 1:1 risk reward, your system will be profitable. And here with 40% win rate and 1:2 risk reward, your system will be the profitable. But if you observe here, reduce the risk reward from 1:2 to 1:1, your win rate should go from 40% to 60% in order to make you profit. So let's carefully see the next chart where we have win rate and risk reward. Here we have risk reward starting from 1:1 to 1:5, and these are the win rates starting from 20% to 60%. So when you have the risk reward 1:1, then your break even will be 50%. So above 50% you will be profitable. Okay, so when you have 1:2 as your risk reward, then break even will be, to be precise, 33.33%. okay, above this you will be profitable. When your risk reward is again 1:3, then your break even will be at 25%. Above 25 you will be profitable. And for 1:4, your break even is just 20%. And for 1:5, your break even will be 16.66%. Take a screenshot of it, because this will help you in your trading in long term. And as a beginner, I would suggest to stick around 1:1 and 1:2, these ratios only, and try to have the system over win rate above 60% with these two risk reward ratios. Because when you go beyond 1:3 and above, then you may think your win rate should be very less, but there will be losing streaks. You have to handle those losing streaks, and as a beginner your psychology hit and you will stop trading that particular system when actually the winning streak will start rebound. So stick around for 1:1 and 1:2, and once you have a good experience, then try to go for 1:3 or max 1:4. Now let's move ahead and see some other key ratios apart from this win rate and risk reward. These are also important. So first one is expectancy ratio. So what is expectancy? Expectancy is average win into win rate minus average loss into loss rate. And expectancy ratio is expectancy divided by average loss. So consider this example. Average win will be 200 and win rate would be 40%. That means 0.4 minus average loss will be 100 into since our win rate is 40, loss rate would be 60%. That means 0.6. So this is 80. 200 into 0.4 is 80 minus 100 into 0.6 is 60. That means plus 20. So your system will earn average plus 20 per trade. So with that, our expectancy ratio would be 20, that is expectancy divided by average loss is 100. That means 0.2. Positive expectancy is a good system. That means on average you are making money with each trade. Professional traders aim for at least 0.2 to 0.5 expectancy ratio. Top performing strategies may have +1 or more expectancy ratio, but those are rare and with very minimal trade or very few trade. The bottom line is, if your expectancy is positive and repeatable, that means you have an edge. So next ratio is profit factor. So profit factor, the formula for profit factor is total profit divided by total loss. So let's consider example here. 2000 is your total profit divided by 1200 as your total loss. This is just an example. Okay, this comes around 1.66. Anything above 1.5 is a good system. Now let's see another factor, drawdown. So drawdown is nothing but maximum fall in your account before recovery. So let's suppose you start your account with 1 lakh rupees and it became 90,000. So that means your drawdown is 10%. So this is okay, but if your drawdown is 30 or 40%, then that system will be very risky. These ratios sound advanced, but trust me, if you know only first two, that is win rate and risk reward, you are ahead of 90% of the traders and you will have an edge over them. So now consider one small case study. Let's say you run a trading plan where your risk per trade is 1000, reward would be 2000. That means 1:2 risk reward, and you run 20 trades in total. Whereas in 20 trades you win 7 trade and you lose 13 trades. 7 trade out of 20, that means 35%, and 13 trades you lose, that is out of 20, that means its lose rate is 65. So profit will be 7 into 2000, that is 14,000, and 13 into 1000, that is 13,000. So here your net P&L will be 1000. Okay, let's calculate the expectancy ratio as well. Expectancy ratio, that means average win into win rate minus average loss into loss rate. So 2000 into 0.35, 1000 minus 1000 into 0.65. That means 700 minus 650, that is 50 per trade. So average 50 you will win per trade. So expectancy is 50, loss per trade is 1000. That means expectancy ratio would be 50 divided by 1000, that means 0.05. This is very tiny but still positive. Let's see this profit factor. So profit factor, that means total profit divided by total loss. So 14,000 divided by 30,000, which is 1.07. This is again tiny profit. You will have struggled a lot with this particular system, but it will be marginal profitable. Here you need to improve this system. Consider the drawdown. Risk per trade is 1000 and you will have 6 losing trade in a row. So you will lose 6,000. And if you start with 50,000 capital and you lose 6,000, you will have 44,000 in your account, and that need to rebound. 6,000 divided by 50,000, which is 12% of drawdown with this system. Hope you understand all these ratios. Now I don't want to throw too many formulas to you at one go. To really understand how these ratios work together in real trading, I'll go much deeper in the next video. If you want to follow along and not to miss it, make sure to subscribe to the channel. So to interpret this particular system, we have very low win rate plus positive expectancy and profit factor just above 1. Here we need the improvement. You may struggle to run this system continuously, and drawdown is 12%, which is okay, but losing streaks will stress you mentally. So even though this system will make you money, but low win rate and small profit factor, you may struggle to continue with this system. That's why as a trader we balance between win rate, risk reward and the psychology. Trading is not about predicting perfectly, it's about managing risk and probabilities. Focus on risk reward, win rate and keeping your drawdown low, and you will be already thinking like a professional. If you found this helpful, then please subscribe and check my playlist on trading foundations, where I simplify complex concepts just like this one. Thank you, and I will see you in the next one.